Due to the recent tech sell-off, there's a lot of opportunities in the market. I decided to open a position in Reddit, a company that's down 42% year to date and down 37% over the last year. I'm going to be going over Reddit's economic moat, how they've performed over the recent quarters, and other key performance indicators. And at the end, I'm going to be going over a valuation and why I think Reddit is trading at or below fair value. I actually used to be a Reddit shareholder, which is why this says 1000% money-weighted return. I'm not really sure why it says this. I think this is a bug, but you can see that I decided to start a $4,000 position in the company. The company reported earnings last week, and the company sold off another 8% after earnings. We're going to be going into why it dropped after earnings and why I think this is not something to be worried about. So we have a lot to get into in this video. Like and subscribe if you enjoy the content. If we come over to the investment thesis tag and then come over to the Reddit's economic moats, I believe that Reddit's moat lies in the decentralized communities that it has on their social media platform. I think most people are aware of how Reddit works, but essentially Reddit is a social media platform that has thousands of different communities that cover topics in all aspects of life. This creates a hyper-focused niche for each group where advertisers can place ads on each individual thread that is going on in these larger communities. For advertisers, this community structure offers unique ad real estate that is tailored to people that might be interested in their products. For example, if a company is selling cooking equipment, they can directly advertise on cooking subreddits, and even furthermore on individual conversations happening on that cooking subreddit. This offers a unique potential for return on investment for ad companies. The platform's perceived authenticity enhances this value. A 2023 survey commissioned by the company found that 75% of US Redditors age 18 or older trust the platform to inform their decisions when buying a new product across various consumer segments. This level of granular targeting is unique to Reddit and is the foundation of the company's moat. For larger clients, they manage ad services, and smaller clients can operate on a more self-serving basis. So advertisers can actually see specific subreddit users who have self-identified on Reddit as being interested in the industry that a company sells products in. Over the last year, Reddit has started integrating artificial intelligence into its ad stack to optimize targeting. This has shown success in higher click-through rates over the last year. We're going to be going into all these numbers. The company will continue to improve their ad platform, which should in turn increase revenues but also margins. Historically, Reddit's management has focused on user growth over monetization. Management has a multifaceted way to monetizing the user base, primarily through advertising. This is the vast majority of their revenues, but also data licensing, just all the data that they have from people having conversations on Reddit to different companies to use that data to train large language models, and additionally growing its user base to grow both of these metrics. I still think the company is in the early stages of maturing their social media platform, cleaning up the historical questionability of the type of content that's normally on Reddit. This can be a risk factor for advertisers. So practically, this can look like improved community moderation and content moderation. This should increase the daily active uniques and weekly active unique numbers, which will in turn increase revenues and profits. We're going to be going over the DAU and WAU metrics and what that means when we get to the growth profile of the business. I believe in 2024 and 2025, Reddit has solidified its role as essential infrastructure for the AI era through major licensing deals. Notable agreements include a $60 million annual contract with Google and approximately a $70 million annual contract with OpenAI. These partnerships provide AI developers with access to Reddit's massive web of authentic human-generated conversations, which are highly valued for training large language models and improving RAG results. The data that's provided for these companies is 100% gross margin revenue that should be resilient to cyclicality, unlike their ad business. So this diversity in revenue increases the moat of the company because they're not as subject to changes in advertisement budgets. Getting into how Reddit actually makes money, obviously we have advertising as the largest portion of Reddit's revenues. I spoke earlier about how users self-identify as being interested in a specific product, and being able to advertise to them is a differentiator for Reddit. This is used in combination with broader targeting ads based on topic, interest, location, and device type. Reddit offers a unique ad suite to marketers that offers top of the funnel and bottom of the funnel opportunities. Here's a list of Reddit's ad format, something that they're growing and creating new different ad formats on a quarterly basis. They recently talked in the last earnings call this week about continuing to add in video ads. This should be a more engaging form of advertising, and I think it can continue to help grow revenues and diversify their ad suite. But the different ad formats include promoted ad posts that mimic user posts with up and down voting, providing direct engagement, banner ads, that are more traditional located below posts, multifaceted ads that showcase multiple products, and lastly, sponsored content of brands like AMA sessions or Ask Me Anything sessions with different brand representatives. The company has aggressively invested in its ad stack and is deploying AI to better serve the companies. The improved quality of Reddit's ad targeting and deployment strategies have shown early signs of success, being reported by companies noting increases in click-through rates in recent earnings calls. Talking more about the ad stack, the company is also building out a measurement system with a conversion API system for businesses to look at prior to purchasing ad real estate. This is really important for marketing their ad services to more performance-based advertisers who are looking for a clear-cut return on investment. Talking about user engagement, this is what drives ad revenue long-term. Reddit is increasingly positioned not only as a place for entertainment, but as a place for authentic, community-vetted product recommendations and purchase advice. This shows up as trying to convert more weekly active uniques to daily active uniques, which are much more engaged and have a much higher ARPU, or annual revenue per user, than people who are weekly active uniques or just visiting from Google and don't have an actual account. Obviously, you can go directly to Reddit from Google without having an account to seek information or to get entertainment or whatever you're searching on Google.
But the reason that the stock is down 21% after earnings is because Reddit is going to stop reporting on logged in and logged out user engagement in the third quarter of 2026. Anytime a company decides to stop reporting a key metric, Wall Street gets worried. But I don't think management is trying to hide anything in the books. I think this is evident because management said that they're phasing it out and doing it until Q3. So we should monitor these numbers in the following quarters.
I put together a spreadsheet of key performance indicators. This includes global DAUs, and you can see how this is growing over the last 5 quarters. So the user base is still growing. And it's important to distinguish between US users and international users, so the annual revenue per user is higher for users in the US. As you can see, the US ARPU is much higher than the global ARPU. Trying to close this gap is something we should look for in the future when determining how Reddit is performing. Annual revenue per user is a huge metric for advertising companies. Meta has best-in-class ARPU numbers, and I don't think that Reddit will reach as high of an ARPU as Meta, but even if Reddit can just get a third of the way or halfway to what Meta's ARPU is, the company should do very well over the long term. Continuing with data licensing, this is a much smaller portion of revenues, but Reddit has a 2-decade-long vault of human-to-human interaction, and this is what provides the vast well of real data that can and is being used by the companies to train large language models and other AI products. Large language models are algorithms, and they can only learn from what you give it, so this data is so valuable. And I think in an increasingly artificial intelligence world, this data will just become increasingly valuable over time. This is being shown with Reddit's deals with Google and OpenAI. Management said that they expect to generate around $200 million in revenue from data licensing contracts over the next 3 years. This indicates that more deals like the OpenAI and Google deal are in place or being negotiated. And the last part of their revenue that I'm not going to talk about very much is their membership system. This provides users an ad-free experience and other perks in exchange for a monthly fee. In addition, they get coins and awards that can be given out on the website to posts that people think are worthy of these awards. I don't really understand the value proposition here, but as the company continues to mature, I think Reddit will continue to try to optimize and clean up their platform, or at least the narrative that used to be surrounded by it as time goes on. If we look at the recent performance for Reddit over the last 5 quarters, you can see that revenue is growing at a staggering rate. And obviously in my assumptions for the DCF, I want to assume this high of revenue growth because it's important to be conservative in your assumptions. But you can see that the company has 90% gross margins, and we'd hope to see that operating margins continue to grow and get closer to the gross margin as the business continues to mature. You can see that diluted earnings per share and free cash flow are also growing at a very fast rate. And so when you're valuing these type of companies, it can be hard because they're growing so fast, and any bad news can severely affect the PE ratio. The reason that I'm doing it on a quarter-to-quarter basis and not an annual basis, which I like to normally do when valuing a company,
Is because Reddit only IPO'd a year ago.
And so with fast-growing companies, any miss on the top or bottom line during earnings calls can severely affect the stock price. But I'm a long-term investor, and so I think over the long term, Reddit will continue to do well and grow. And their cash flows will be protected because of their economic moat. Getting into the valuation, the company grew 65% for 2025. And the estimates that I put in for 2026, 2027, and moving forward, I believe are relatively conservative. Management just guided for 50% growth for the first quarter of 2026. And so I think the 35% growth rate for this next year is conservative. I also assumed a small amount of margin expansion, but I kept this the same as well, which I think is also conservative. If we come down to the discount rate, here's the risk-free rate and the market risk premium. I had this add up to 10%. In these two lines, you can see the present value of the future cash flows. And so after you subtract out the discount rate, and I applied a conservative 25 PE multiple, which is half of the company's trailing 12 months PE multiple, you get an implied share price of $125, which is just below where the company is trading at $140. I don't know why this says 151. I don't think Fiscal AI has updated the information yet, but I believe this is an extremely conservative scenario valuation. And so I believe the risk or downside of this investment is extremely small relative to the upside. If we change the assumptions at all, we can see a much higher implied share price. If we value out a different scenario with still what I believe to be conservative growth rates, here you can see for 2026 a 40% growth rate in revenues, 2027 28%, 22%, and 20% for 2028 and 29, and still keep margins the same, you can see we get an intrinsic value per share of $155. This is $15 above where the company is trading today. So because of that, I think the company is trading at or below intrinsic value, and so I decided to start a position. If the company stays around these levels, I plan to build out my position and buy more shares. But right now we're sitting with a concentrated portfolio of 4 companies, right? We have Google and Reddit, Netflix, and MasterCard. I've been contemplating selling my MasterCard position and putting that money into Reddit, but I want to see what the share price does over the next couple weeks. If you made it to the end of the video and enjoy content like this, please consider subscribing and liking the video. See you in the next one.